Hello, hello, hello. Welcome back. Welcome to my channel. This is Ria, and I am your state licensed life and health insurance agent. And welcome to my channel called Fearless Insurance, where I talk everything and anything about life and health insurance so that those 106 million Americans that are not insured would be encouraged and educated and understand how important it is to protect your family. So today I want to talk about the two most used life insurances in order to give, just to give you the basics. So in case you say, hey, I want to just get my toe wet and see which one would be better for my family and my affordability, let me just go ahead and just jump right in and let you know which ones would work for you. So the first one I would like to talk about is term, and I hope you can see my board here, but if you can't, I'll just, I'll clearly point it out. But term insurance, as you'll see here, term insurance is a temporary insurance. It is not set up to last your whole life. Usually young people that have children, they're just starting their families out. A lot of times they cannot afford whole life insurance, which costs a bit more because whole life is for your entire life. But I'm not talking about that right now. Yes, people start off with term insurance. You pay one premium for 10 or 20 years, and after that, you're done. You're not covered anymore. So term insurance sets for a set period of time, and the premium, like I say, it stays the same. If your premium is $50 a month and you got $200,000 in life insurance, your partner is insured for $200,000 for 10 to 20 years. And it stays the same regardless of your age and your health. At the end of that, you have nothing. There's no cash value, you have no coverage, and you would have to start all over again. And if you got the insurance when you were 20 years old, and then by then you're 40 years old, you would go again and try and get life insurance, and you would be judged at the 40-year-old rate, as well as whatever health conditions are happening at that time. And that's term insurance. It's more affordable than whole life, and it's for a shorter period of time. And the lock-in period, you get to choose how long your premiums, the premium level, you get to choose how long you want that to be. Like I said, 10 or 20 years, but it does stay the same. And it does go up after, the term ends, and you have to start at another age, and that's term. Whole life is called permanent insurance, and whole life is a coverage for a lifetime. It always costs a little bit more, or maybe a lot more, depending on how much coverage you want. But it is for your entire life. Let's say you're 30 years old and you start getting whole life. You pay a premium of about, $75 a month for $200,000. Well, by the time you get 85, 90, let's say you live to 100, that policy will still be in effect. Also, with whole life, the premiums never ever go up. As you see here, I wrote they never go up. And you have an option how you can pay. You can pay monthly, you can pay quarterly, or you can pay annually. You have options. You have more options when you have the whole life policy. And there is another benefit to the whole life policy. You get guaranteed cash value. What that means is money grows on that account. As it sits there, it grows, and you can retrieve the money as you need it. Let's just say you want to buy a car, you want to put a purchase on a home. After 20 or 30 years, perhaps there will be some cash value which you can retrieve. Also, the benefits of this insurance, it accrues cash deferred. That's a tongue twister. It accrues cash deferred, so you don't have to pay taxes on it. So there are some tax benefits to having a whole life policy at this time. No renewing. You don't have to reapply after 30 or 40 years. It just keeps going, and you do not outlive this coverage. That's whole life insurance. The premiums stay the same. Like I said, once you purchase it, it never ever goes up regardless of your health and regardless of what age you get. At age 50, you'll be paying the same price that you paid when you bought it when you were 20 years old. And you can use the dividends to buy an additional paid up insurance and grow your policy. And then you can make the policy, if it's, let's say, $500,000, you can use the dividends on your current whole life policy and add it to your current policy and have a bigger policy for the beneficiary. So that's my brief take on the difference between term policy and whole life policy. Of course, there are also other particulars depending on what you choose and your family, but those are the basic ones. The term life is for people who are budget friendly, and I should say that the term life, the actual policy is budget friendly, and it's made so it can fit your budget. And the whole life policy is focusing on, having this policy all the way up until it's time to cash it in. The beneficiary cashes it in. So if you have any questions, comments, or anything, or like I always say, if you want a free quote or anything I can do to assist you, please feel free to go to my comments and put it in. My name is Ria, and I am your licensed life and health insurance agent. Thank you for listening to my channel, and I hope you come back again. Have a wonderful, wonderful day. Bye.